Hey guys, what's up? Shane here from Awake Effects. I want to welcome you to this trading channel. Now, in this lesson, I'm going to talk to you about how to cut a losing trade early. Now, it's not always possible to cut a losing trade early. I'm actually against it, to be perfectly honest. But there are moments when I can see on the chart evidence that this trade is going to hit my stop loss. And as a result, I can exit the trade early and reduce my risk. So for example, I might risk 1% on a trade, but I can leave the trade early and maybe lose 0.5% instead of a full 1% on a trade. So we're going to look at two trade examples today that I took, which were losers. And I know, look, I'm not a superhero. I do lose trades, all right? But we're going to look at two examples I took this morning where I lost money on the trades, but I exited these trades early and reduced my risk. I wanted to give a quick shout out there to Rod James, who put a comment under one of my videos. It was him who said that it'd be a good idea to do a video on a losing trade because there's a lot of learning from that. So in this video, we're going to look at the losing trades from this morning. We're going to review them and see how I cut the trades early, reduced my risk. Now, to those of you out there who subscribe to the channel already, thanks very much. I do appreciate each and every one of you. And if you are new here and you're looking to improve your trading, then make sure to subscribe. Hit that bell icon so you don't miss out on any upcoming trading videos or strategies or live trades that I'll be doing there for you. So let's have a look at the charts. Right, so we're looking at a chart of the euro dollar, the 6E futures market here. And this is bar replay mode. So I'll show you exactly what I was looking at, where I took the trade and why it failed. So here I marked up this morning buy side. This is the buy side area I identified here, this high. And price kind of broke above that high there. And this green box represents between 7 a.m. and 10 a.m. the UK session, GMT time. And once I saw this break above the high, I was like, okay, I'm interested in potentially taking a short. But obviously I want to see a break in market structure before that happens. And then if I do get a short setup, I'll be targeting maybe down here, the sell side all the way down here. So it was a very small risk for potential huge reward. So I was willing to take the trade. So we move forward here, and it is the 5-minute chart we're looking at. As you can see, there was a little bit of a move around here, but then there was a structural shift. If you look, so I had a series of low, high, higher low, higher high, higher low, higher high. And then I was looking at this low here to see if we could potentially get a break and see something like this. Okay, this is what I was hunting this morning. So let's move forward. Then we got that nice break and a close down here. So that's a nice displaced move in a 5-minute chart. I did wait because it wasn't yet 7:30 a.m. So it's a little bit too early for me to be entering a trade then. So I waited a little bit. I move forward. And then I spotted this fair value gap here on the 5-minute chart. We'll mark that up between this low and this high. So that was a fair value gap. So I was interested in potentially getting in short here. So then we move forward. Price made another low. It had a bounce. Okay, it took out these lows here as well. Then we had a move into this fair value gap. I didn't take the trade yet because it wasn't yet 7:30. So I waited a little bit more. As you can see, there was also confluence with a Fibonacci retracement from high to low. Price that came in above the 50% retracement level. So there's a lot of tick boxes here, just like any other trade that I would normally do. So let's move forward. We had a bit of a sell-off from there. It was at this point then I said, look, if price comes back up here, I'm definitely taking a short. Price came back up into the area I went short. I put my stop loss above the high and I was like, okay, here we go. I'm in the short. We'll mark our short position here. My stop loss was above the high. It was 10 pips. Okay, my stop loss was up here. And I was targeting all the way down here. So very healthy risk to reward if we can get this trade moving. So I was happy with the trade. So let's move forward. Boom, nice sell off. Okay, this is good. If we get a break at this low, now all will be fine. Boom, we got a break at that low there. I was okay, so I'm happy enough with this trade. It's usually at this point of a break of a low, I might move my stop down to the highs here to reduce risk. So let's see what happened then. Price continue moving lower. Continue moving lower. Happy days. Continue moving lower. Then we got this violent move up. Okay. When that happened, I was, okay, hold on a minute now. What is here? What caused this violent move up? Is this something to be concerned about? So if I zoom back here and I pull a Fibonacci, this is the trick. This is the trick, the hack. So if I pull a Fibonacci from the low to the absolute high here, price came down. What did it do? It bounced off the 50% opposing level there. Exactly. Bounce and boom. Now, when this happens, generally speaking, off a Fibonacci retracement level, it will usually mean there will be a move to new highs. However, I was willing to give it the benefit of the doubt because we got a little bit of a spike there. So I said, okay, I'm going to hold this a little bit longer, but if I don't want to get stopped out above these highs, if this is going to blast through these highs anyway. So the trick was, if you see a violent move kind of against the position that you're in, have a look and see where that location is, or just always mark up the opposing Fibonacci level and see what happens. So then we move forward, and you can see price moved right up here, and it was in here that I closed my position. Okay, so I closed my position early. I closed my position in around here. I was looking at monitoring it on a 1 minute chart. I think it was on the 1 minute. And I was looking at this here. And then once we got this kind of break close above this, okay, I'm closing this. I closed it around here, reducing risk. Okay, so that's one way to reduce risk on a trade. And then what happened next? We broke the high. Okay, so the high was broken. So I minimized my risk in that trade. Back to a 5 minute chart. Then what happened? Then I decided to potentially take another trade short if I got a change in market structure from this high break. We zoom to 1 minute. So I was looking, can we get a turn here? Is this short going to be the one that works? So we move forward. You can see the 1 minute structure here. Higher highs, higher lows, higher highs, higher lows. Okay, it was at this point here, I was like, okay, this is a structural shift. Price making higher highs, higher lows, and then we get a breakdown. And I waited a little bit more. Yeah, and once we kind of got this break here, I entered short again. Stop above the high. Let's mark up our short position tool. I was still able to put my 10 pip stop on the trade, but still targeting the lower end down here. So I was willing to, okay, run with this short trade because the stops were ran out here again. So I thought maybe this will continue. And price continued lower. But then we got this violent bounce up here again. And I was like, okay, I zoomed in a little bit. I jumped to a 5 minute chart. This is the 5 minute chart, so I'm short. And I see this candle, that's okay. I'm happy enough to hold this. Then the next 5 minute candle does this. I'm like, hold on a minute. This is going to break the highs again. Right? So what I decided to do, I decided to just close the trade right there. And I exited the trade early again, reducing my risk. So I had two losers in a row, both around a similar trade idea, similar level, looking to go short. Why else? What's the hack here with this trade? How did I know this was going to break the high? Well, if we look closely, there was a fair value gap on the 5 minute chart this way. This candle's low to this candle's high. There was a fair value gap in there. That's a fair value gap long. Price had moved up through it, pulled back, and did not break it. It held. The body candle is held at the midpoint of that. This moved higher. There was a bullish candle. Fair value gap long held. Why do I need to wait for the break of this high to close the trade? So I just closed the trade there. Then what happens? Boom, we break the high. So I got out early, out of the trade. So I know this is a lot of detail there, guys. Let's see what happened afterwards. This is what happened afterwards. Price starts moving lower. And where are we right now? This is where we are right now. So we broke the high again. So it's just a nasty day. It's a Friday. Friday can be a nasty day of the week. Had this kind of setup happened on a Tuesday, 9 times out of 10, this would run to target. Sometimes Fridays and Mondays can be a little bit trickier times of the week. So I'm happy to then cut these trades if they're not doing exactly what I want them to do. So I hope that was inspiring, guys. Always be monitoring your trade once you're in them. I don't advise to cutting trades often. It's only when you see something very obvious like this that you're on the wrong side, and you have to understand that it's okay to have a losing trade. I know that my equity curve is always going up over the long term. In total, my losses were about $700 in the first trade, $700 in the second trade. The reward on these potential trades, if they hit targets, around $3,000 to $4,000. So I was willing to risk that. Hope you enjoyed that. Hope that gave you a bit of insight into how you can manage a losing trade, potentially get out of the trade earlier by looking at Fibonacci's, opposing Fibonacci's, and also using fair value gaps as well to know if a trade might be moving against you. So thanks for watching. Please subscribe to the channel if you haven't done so already. Appreciate each and every one of you, and let's speak soon. Bye-bye.